Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video for our YouTube subscribers and Twitter followers. I haven't done a video for a couple of weeks. You might go back to the video from 2 weeks ago if you want a little bit of review on the dollar and gold and Bitcoin, and I think there's one or two other markets we took a look at. All of that is coming to pass about a week later than anticipated, but those reversals and significant reversals, I believe, that we're anticipating a couple of weeks ago have now come to pass. And you get some details on that from the video a couple of weeks ago. And by the way, if you haven't gone to dynamictraders.com and registered for our Traders News, you ought to do that right now, because we do some updates there that I don't do on YouTube or Twitter. Sometimes it's just a chart with a few comments, but it can be really helpful for you, both in being prepared for a trade setup as well as an ongoing education. Almost every Wednesday, I put some update on the Traders News on our website. So check that out. Today, I'm going to take a look at the S&P and a quick review of Bitcoin as well. So let's get started. Take a look at the position and potential trade strategies in the next few days for the S&P. This is the SPX weekly data, and just a couple things we take a look at is the weekly momentums have reached overbought. It's at least warning us that the SPX, as well as the other indexes, should be at or near a weekly high. And I think there's a good potential that that high was complete this past week, but we need the market to prove itself, to prove a reversal. We call it a reversal confirmation signal. Last week, of course, was a double report week, pretty important report, the jobs report and the Fed announcement, both coming in the same week. That's pretty unusual. And we can see that often the financial markets make reversals around one or the other, sometimes both of those reports. The December high was made the week of the December jobs report, and then there is an accelerated decline the week of the Fed announcement. So we're in a position to complete that weekly high. And next week is 100% alternate time projection of this past 7-week advance. This past 7-week advance advanced about 17.5%. We're only in week 6, but it's only up about 11.5%. So it's saying that this advance since the December low has less buying power, less enthusiasm, less rate of change to it, and that's a wake-up call that the market is weakening. Here's the daily data. And just daily data, I've just marked off the recent jobs reports. This is something, the three main reports you want to always be aware of, at least during, right around now, is the jobs report, a Fed announcement, and the CPI report, that monthly report. Those three you should always have on your charts, and look at the technical position going into those reports. As you can see, recently, at least in recent months, that job report has been pretty important. For instance, in the December report came the day after the top before a weekly decline. The January report was a day where the trend accelerated up and kept going right into this past week, which had the jobs report as well on last Friday, with the, as you saw, the weekly momentum overbought, and the daily momentums made a bearish reversal on Friday. And they did that on a price momentum bearish divergence. So we want to be prepared that potentially the S&P has made a weekly high. This is another daily data. And coming off the December low, we have the potential for a nice Elliott Wave 1, 2, 3, 4, and this is a wave 5, and it's what we call an ending diagonal, if indeed that's what's happening right now. And Thursday had the potential to complete the wave 5 of 5. Now it would take a close below the wave 3 of 5, a closing high, to confirm that the weekly high is complete. But because of the high so far has been made and a potential wave 5 and 5 going into that double report week, as well as on Wednesday was a very significant time factor of the low to high. And on Thursday was just the simple high to high to high. So we had two daily time factors, and the low high is a very significant time factor. I've taught our DT report subscribers when that is significant. So hopefully you'll subscribe and learn a little bit more about it. But Friday made a daily momentum dual look-back bear reversal with the weeklies overbought. So I'm looking for, if there's a confirmation of this reversal on Monday just by a lower close, that's a pretty good initial signal that the high is complete. It at least should offer a good trade opportunity with minimal capital exposure with a stop just above last week's high. So you can do that as a short position on futures or ETFs, or there's inverse ETFs as well. So what we're doing is we're identifying a high probability setup with minimal and well-identified capital exposure. So we can adjust our position size to limit our capital exposure if, in fact, we would get stopped out. So before we continue, hit that subscribe button below so you get notified whenever we have an update that's not on a regular scheduled update for our regular Saturday reports, as well as go to dynamictraders.com, hit the Traders News tab, and register for our Traders News. No cost, no obligation, but you'll get additional updates and trading education from what we have on YouTube and Twitter. Okay, let's get back, take a look at Bitcoin. Well, this is the GBTC weekly data. I use this instead of the Bitcoin itself. It's an ETF that follows Bitcoin tick for tick. So anything we look at on GBTC can be applied to Bitcoin itself. If you remember the video I did a couple of weeks ago, we're looking for a probable weekly high coming up in Bitcoin. Ideally, it would have been not this past week, but the week before. That had the significant time cycle around then. So this past week did make a new high, but it did close lower on the week, making a weekly momentum dual look back bear reversal from the overbought zone. That's fairly significant. And this past week also was the low to high on the weekly data, typically the maximum before a weekly high would be complete. So we've hit those extremes. The ideal time was last week. This week it went higher, but closed lower on the week. So Bitcoin is in an immediate position to have completed at least a weekly high followed by sideways to down for 3 or 4 weeks. Here is the GBTC daily data, and a couple things I want to bring to your attention is, one, look how often around 23, 25 or so days reversals are made. This October low was 23 days after a prior reversal. The next low was 27 days. The next low was 25 days. And last Thursday was 24 days. So we're right in that area, very symmetrical, where the weekly momentums are dual look back overbought. Actually made a bear reversal last week. And it's a real significant time period, not only because of the low to high, which I have in here twice. I don't need 2 of these. But again, on the weekly data, it showed as a significant weekly low high. The Bitcoin and GBTC often makes reversals also around these job reports or Fed report. Let's go back to November. This was a double report week as well, and that was the high before a multi-week and really substantial decline was made. And here we are again, the same type of report week, with the jobs and Fed announcement on the same week within a couple of days of each other, with the weekly momentums having been 3 weeks dual look back overbought, making a bear reversal. This is a real wake-up call that the high is probably complete. What do we need? Well, we need this 8 daily momentum to make a bear reversal. So what we need is Monday or Tuesday to have a lower daily close, and definitely a close below 1189. That's the January 30th little minor swing low close, would signal that the weekly high is complete. I'm not going to go into details here, but for those of you who have some familiarity with just basic Elliott Wave, this is what's called, at least potentially, an ending diagonal. It's an overlapping structure that is usually the last of the subdivisions before a higher time frame reversal is complete. So again, a close below 1189, the January 30th closing low, would confirm this was indeed an ending diagonal and that it is complete, and that the Bitcoin and GBTC will then be sideways to down for at least 3 to 4 weeks. Well, that's it for today, my friends. Have a safe and healthy week or two until I'm back with you with another video. And please remember, position size is really important to understand to limit your capital exposure on any trade that you take, regardless of the market. That's it for today. It's Robert Miner, over and out. Take care.